As far as the dollar is concerned, I mean, it's lost since 1953, 99% of its value versus gold. The last percent can go on for a while because it's not like the drop to 99% happened like in 2 years. It's been happening for over 70 years. I think people might wake up, or our politicians and the people who run things might wake up when we start seeing gold go up 500, 1,000 or more a day. Then they'll wake up. Right now, I don't think they're still awake to it, even though I think it looks really bullish, the long-term chart of gold. I think it's going to be very hard to stop it going up.
Don't miss out on future content. Hit the subscribe button and turn on notifications to stay in the loop. Your support is greatly appreciated. Join our WhatsApp channel for real-time updates, breaking news, and expert predictions on gold, silver, and financial markets. Link in the description or pinned comment. Stay ahead of the curve. Don't miss out.
Take a complete destruction of our currencies, and scenes like we saw back in 1923 in Germany, for people to wake up and realize that what we have now is not real money. I mean, on this kind of space that we are, the gold, silver, sound money space, we're well aware of it, and it is a growing space, but it's still, I think, minuscule to otherwise, And I mean, when you talk to people, they have no clue about gold. They think that premium bonds are the safe place. Like, premium bonds are a kind of government bond that you buy here, and they do a draw every month, and you might win loads of money. But no talk about gold. I'm not even sure whether Besant knows that, even though he said prior to becoming Secretary of the Treasury that his biggest holding was gold. But as far as the dollar is concerned, I mean, it's lost since 1953, 99% of its value versus gold. So the last percent can, I mean, the last percent can go on for a while because it's not like the drop to 99% happened like in 2 years. It's been happening for over 70 years. I think people might wake up, or our politicians and the people who run things might wake up when we start seeing gold go up 500, 1,000 or more a day. Then they'll wake up. Right now, I don't think they're still awake to it, even though I think it looks really bullish, the long-term chart of gold. I think it's going to be very hard to stop it going up. Or the way I like to look at it, it means that our currencies are in terminal. They've entered the phase of the all of a sudden, I think it was the Hemingway's novel quote, "How did you go bankrupt? Gradually, and then all of a sudden I was bankrupt." I think we are entering that stage, and it doesn't take years. It could take less than a year. It could be very quickly. That's what happened in Germany in the 1920s. All of a sudden, the currency completely collapsed, i.e. people didn't want the currency. They wanted to get rid of it for anything that had some intrinsic value. Yeah, I mean, the first question about the mainstream, I guess they're financed by the Wall Street houses that deal more in stocks, bonds, derivatives, and the kind of people that like gold, they avoid Wall Street unless you're buying ETFs, which I don't recommend. And they wouldn't, financial advisors, stockbrokers, they're not going to come to you and say, "Oh, buy physical gold, it's good for you," because they're not going to benefit from it. And the other reason is that I think people are still, even though the smart money seems to be getting out of the stock market, like Warren Buffett, I saw that retail is piling billions of dollars in the last few weeks or so into the stock market. They still believe in this buy the dip strategy that has helped keep the Nasdaq and the Magnificent Seven zooming higher, and also cryptocurrencies that a lot of the people in Bitcoin and cryptocurrencies, they are very similar in terms of their philosophical stance uh, towards sound money as people in the gold and silver space, but they've been able to yeah, influence young people a lot more. And I spoke to someone, I interviewed someone recently, and he told me that he was watching CNBC by accident, and they kept the ticker scrolling the bottom of the screen, and he counted that in like a certain amount of minutes, they only showed the price of gold, which was at an all-time high once, but Bitcoin they showed the price 9 times, right? So that's what we're up against. But in a way, that's positive for gold and silver because it means we're still not in the euphoria phase yet, and there's still a lot of room on the upside. I think back in end of January, beginning of February, it was said that it was 400 tons that went from the Bank of England, and then we to the U.S. physical. And then we also have been hearing from Stone X, who's a LBMA member and a pretty big bullion dealer, that it's more like 2,000 metric tons that have flowed into the United States. And yeah, the other thing is that it's not just, it seems to be flowing outside the COMEX mechanism as well. So not just through COMEX. The implications to me is that it could unravel the whole LBMA, yeah, basically fractional reserve um, scheme for gold, or virtual gold trading, whatever you want to call it, paper gold. And that's the thing, Jesse. The bullion banks and the bankers in general don't see anything wrong with that because that's how they operate the current fiat currency system. I mean, the Federal Reserve back in 2020 under Jay Powell's leadership, they uh, they removed all the reserve requirements for banks. So if you put a dollar with a bank, now they don't have to keep any in reserve. It used to be that I think they used to keep more than 10 or like 12%. Now it's nothing. And I guess it was justified maybe because of what happened in 2020, 21. But now we're in 2025 and they still have that. So that's what they do with gold, and they do it because they've been able to do it because most people, usually the funds and speculators, they trade gold on the LBMA, on the OTC market in London. It's just like a foreign exchange. Uh, it's like a currency. It trades. London is the biggest foreign exchange market in the world. Um, yeah, the problem is that now someone big, someone that is kind of in bed with the regulators, it could be the government, is demanding delivery, and that kind of yeah, throws a spanner in the works of this fractional reserve paper leasing mechanism that in the LBMA is limitless. I mean, at least in New York, there's a limit, I think, to hypothecating gold. But in London, it's, yeah, it's, you can do it 100, 200, 300 times. And the LBMA, contrary to popular belief, the whole operation there, because of the Big Bang deregulatory or Big Bang rules in 1986, 87 under the Thatcher government, basically gave control of the gold market to the Bank of England, and the Bank of England said the bullion banks can do whatever they want. We're going to turn a blind eye, and that's the way it's run. It's self-regulated, And I guess, Jesse, this might be things coming back to haunt them because they thought they could run a gold market based on basic mythical values, as I think President Putin called the Western financial system a few years ago, all based on money created out of thin air. So LBMA, it's gold created out of thin air, and silver as well, of course.